Ladies and gentlemen, welcome to the second item of the TCI week organized by ICISA. My name is Richard Wolf, and I've got the honor to head up the ICISA Secretariat. Now, this event's primary objective is to increase the awareness and show the trade credit insurance industry. Compared to other classes of non-life business, we're small. However, we're important, and we're important to the economies we live in, and we're important to the world economy. And for this reason, we should make ourselves known to the world. And ICISA's TCI week wants to do just that. Now, this week, we still have a range of topics. This morning, we had a keynote address by Mr. Antonio Fernandez Martes, who talked about what the European Union is doing primarily in the field of export credit. And we've got some other topics of strategic importance, and this is one of them, the path to growth. Another one is tomorrow, and that is the change in regulatory landscape that surrounds us. We've got focus on some geographical areas, such as the development of trade credit insurance in Southeast Asia. And for me personally, a really important one, how we can develop in sub-Saharan Africa for the good of the economies and for the good of our business. And there are some more focused topics, such as the use of artificial intelligence in trade credit insurance, embracing sustainability, and the re-emergence, if that's the right word, of political risk. Now, for those of you who've taken a look at the list, I hope you'll agree with me that the lineup of speakers is very impressive this year. You're still welcome to register for topics which you haven't registered for. Also, so you'll be able to watch back when we publish all these items on all the videos on our website, icisa.org, beginning of next week. So, let's turn to the current item, the path to growth, unleashing the potential of trade credit insurance distribution. Now, like every third speaker, let me start by quoting Jack Welch from GE. And he is rumored to have said, if the rate of external change exceeds the rate of internal change, the end is nigh. That goes for companies as well as for entire industries. And a good way to assess the health of an industry, which I prefer to than to look whether the end is near, is the growth of that industry. Remaining static or worse, shrinking, is not a good sign. So, what happened in the previous years? ICISA conducts an annual survey amongst its members on the most important indicators, such as premiums and loss ratios. And that shows the following picture. In the first decade of the century, the premium volume of our industry grew by 54%, which sounds really impressive, but the annual growth on a year-to-year basis only averages 4.5%. In the second decade, so from 2011 to 2020, that total growth was only 18%, 1/8. And that corresponds to an annual growth of just under 2% per annum. Looking at the figures, it's clear that the premium volumes tended to increase at the tail end or just after a recession. And that's striking in the years 2003 to 5 and in 2008 to 10. The second decade did not see these spikes. And by the way, this includes political risk business and single risk business. It does not include the premium by our reinsurance members because otherwise we'd be double counted. The year 2022 alone saw an increase of 13% in trade credit insurance premium. Now, on the one hand, expectations of an economic slump might have played a role. And on the other hand, the inflationary environment surely did. The $64,000 question is whether we are addressing the right audience with the right products. How are these target markets changing, and how do we need to address those? And this will unavoidably cause some change. Looking at the general environment, it is apparent that this is changing quite rapidly. And taking Mr. Welsh's quote, the trade credit insurance industry must at least keep pace to continue to thrive and to fulfill its economic function. Now, to discuss this, ICISA is honored to bring you three leaders of the industry to give their views on the way that we can grow our industry. And if I can ask you three to briefly introduce yourself, starting with Antonio.
Hello, thank you, Richard. My name is Antonio Marchitelli. I'm French and Italian. I have 30 years of experience in insurance, but only 10 in trade credit insurance. When I joined COFAS 10 years ago, I had the possibility to run a couple of regions. And since now 18 months, I'm in charge of global specialties that include single risk, surety, and debt collection services.
Thank you very much, Antonio. Stuart.
Thanks, Richard. And again, it's a pleasure to be part of this panel. My name is Stuart Lawson. I lead Aon's Credit Solutions business globally, which consists of our trade credit business, our structured credit and political risk, as well as our commercial surety business. And I'll pass over to Anil.
Thank you, Stuart. And thank you, Richard, for the invitation. So my name is Anil Berry. I'm the board member responsible for Allianz Trade. So right across our business, responsible for all the commercial side. So that's everything from pricing, marketing, sales. I've been in the industry about 25 years. I started very, very young, Richard.
Thank you, gentlemen. And what we pre-discussed is that the three gentlemen will each take some time to give their views on the industry. And I can tell you, I heard some of them, and they're good. They're interesting. And I expect that you would have a lot of questions on this. And you see on your screen a question box. Please don't hesitate. Put your questions to the speakers. We will either during or at the end do a number of questions. I hope that they can answer them all. If they cannot, you're always welcome to put your questions to either ICISA or the gentleman through our website, icisa.org, or by email to secretariat@icisa.org. Having said that, Anil, may I ask you to take the stage and enlighten the audience, please?
Yeah, thank you, Richard. Look, in the last few years, actually, since COVID, we have actually seen some pretty good growth figures from the industries and certainly from the major players. You know, in part, this has been linked to inflation. I think we've also seen a significant growth in bank business as well. You know, at Allianz Trade, we're really focused on growing client numbers. I understand what Jack says, but for us, a really healthy industry has an increase in customer numbers. And I think this is the way you secure your future. So for us, I think there's three areas we really need to focus on. The firstly is distribution, and I mean digital distribution. You know, when I started, I think distribution was a bit more of an art, but I think it's becoming increasingly more of a science today. You know, we're using AI now, not just in claims and risk underwriting, but can we put that lead to quotation, make it much, much quicker using digital distribution, again, using AI. I still think there's always going to be a human interaction in closing a credit insurance policy, but I definitely think digital distribution could be much more used in the acquisition and quotation process. Second, I think the path to growth is involving sustainability. You know, we see a massive demand in clients saying, help us with our net zero transformation as we move to 2030. And I think as an industry, we need to act. You know, I know it's not easy. I have been an underwriter for a number of years, and, you know, there's often a lack of data around underwriting these risks. But I think we need to make that investment. Maybe we need to recruit people from outside our industry, and we need to overcome that lack of data by a real understanding of the risks involved. You know, I think the insurer that can really provide products that really link to sustainability will have a significant growth path in the next 5 to 10 years. And then finally, I just want to look at our products. You know, as an industry, we have a lot of complexity in our products. Not just the product itself. I sometimes am amused by the names we call the products. You know, we don't just call it SME credit insurance. We have some other name as an industry that, to be fair, just adds more confusion in. And for me, I think to really be a leader and grow, we need to really simplify our products. Successful companies do that. You know, you have to look at the likes of Apple, Tesla, Netflix. Sorry to mention a lot of American companies there, but you know, they really have simplified their product offering. And I think as an industry, we need to do that, and particularly to address the SME sector. You know, go back to what I said about client space and being relevant. You know, really, if we can really simplify this product, I think we can take a lot of costs out. Maybe it'll be easier to distribute. And this in turn will then generate a significant increase in customer numbers. So those are the three areas I just wanted to talk about: was one, products, sustainability, and then digital distribution. Thank you.
Thank you so much. Secondly, may I ask Antonio to give his views on our industry and on the growth potential?
Yeah, thank you. If I look back at my experience, I've seen endogenous and exogenous causes or reasons for growth. In the last decade, you said that, Richard, somehow we were living in a world where risks were better and better in the market. So it was more difficult somehow to convince clients and new clients to join this happy family of TCI clients. And so the success recipe at the end was a set of initiatives that were linked to product innovation, distribution, geographical footprint, things like that. This is at least what I put in place before COVID, let's say, in order to achieve growth, and it worked. And since COVID, I observe we are growing even faster globally, but mainly due to exogenous causes. I mean, at the beginning, we saw this huge activity arriving from our clients after COVID due to this backlog of orders, and more recently, this inflationary effect. Is that the kind of growth we chase? Is that sustainable? I think Anil is right in saying that we shouldn't target that. I mean, it's not a matter of premiums. It will be at the end a matter of premiums. But the real measure of success of our industry is how many companies find solutions to their problems within the set of solutions we offer. And I'm not just referring to insurance policies, because at the end, we also offer some collateral services. And we have to keep in mind that our industry is not a demand market where a company wakes up on Monday morning and says, I'm going to look for a TCI policies. We have to go there, reach them, explain what's the value of this solution, why they should adopt it, and eventually customize the right solution to each and every. So at the end, I would like to stress that if you look at the market, you have the vast majority of companies don't even know we exist. There's a problem of awareness. There's a problem of understanding what we do. And I would say that there are two ways of tackling this problem, in my view. One is definitely distribution. We need to invest in distribution. We need to reach them. We need to have the possibility to take the voice of TCI industry to all these companies. But then there is a matter of presence. And we have not enough presence collectively, insurer, intermediaries, association. We have not enough presence in different contexts, and I would like to take a little experience taken from my daily activities in France. I spend a lot of time teaching at university. Teaching at university and explaining what is trade, what is export trade, what are the tools to manage risks, and so on. And when you look at the reaction of these young students, these will be the tomorrow leaders. And you see that you are taking something new to the universe. And this is something interesting. You realize that this is a good investment to create ambassadors, future ambassadors of our industry. And I think that this is a neglected dimension that we should take care of. Sorry.
Thank you so much, Antonio. I'm surprised to see that there are no questions yet. People might be waiting for you, Stuart, to deliver your address. So please go ahead.
Thanks, Richard. And just obviously, Anna and Antonio have kind of picked up on some key opportunities and challenges that we face in order to grow our market. And again, I would fundamentally agree with some of the comments being made. I think, Richard, at the beginning, you also highlighted some of the kind of growth and the growth evolution of the trade credit industry. And I think there was a recent report, I think it actually used some of the data from ICISA from Swiss Re. And it kind of indicated what, fundamentally that it's quite a resilient business in terms of keeping clients, but that the ability to kind of attract new customers really is kind of preventing us from kind of growing beyond what I would say economic activity of our clients or trading activity of our clients. And I think for me, that is the problem statement. I didn't say at the beginning, it's also my 30th year in the industry. And I think ever since I've worked in the industry, I've kind of looked at it and realized that I think from a sales and commercial perspective, I think Anil used the phrase complexity. And I also think we're far too technical in the way we position our product from the outset when we're trying to get clients and future clients to understand the value and the benefits it brings. So if you kind of look back and think about clients, and the way I try and position this certainly within Aon is if you think we're kind of engaging clients for the first time, the macroeconomic, geopolitical headwinds that companies are facing in order to kind of deliver on their own trading strategy and growth strategy is absolutely huge. I think economists kind of refer to that as a kind of polycrisis, where you see all these headwinds coming together to create this hugely challenging environment, which is epitomized by volatility, uncertainty, and dare I say unpredictability. So if you think about that environment, it does make our product really, really valuable if we're able to kind of sell the kind of attributes and benefits that it brings beyond just risk transfer, beyond just financing of receivables. And I think for me, that really is the key, is how do we make sure we position the product in the right way at the outset to allow companies to make better, smarter, and the right decisions when achieving their own growth, because we have some amazing tools. And I think we've seen that with certain insurers have kind of realized the kind of data, the information, the insights that we have has real value to clients, not just as part of a trade credit insurance policy, but also in its own right, allowing companies to trade and make those better decisions. I think the other point that I would make is I think distribution's been mentioned twice, both Antonio and Anil. And I do feel, and I'm sitting here, I look at it and reflect as a broker, I think there is a duty on all distribution partners to look at not just trying to win business and market share that exists today, but how do we kind of grow the kind of size of the marketplace. And I certainly know when at Aon, I'm constantly looking at, are we on track to hit our target, but how much of our portfolio when it comes to new business is linked into new clients? Because for me, that kind of, for me, indicates some of the kind of the journey that we're on in kind of moving away from just looking at kind of being a broker, but being an advisor to kind of a broader, wider set of clients. And I think the US is a great example of that, where we're having a kind of record year in the US. And what is even more for me positive is if you look at that trend, it's new to market clients. And I think there's two factors. One, a kind of recognition for US companies, where I guess trade credit has always been kind of had a relatively low penetration rate, are actually kind of recognizing the risk factors, but also we're looking to kind of push the benefits of the product to kind of new industries and new customers as well.
I think you're right, Stuart. I don't think we've invested enough in the US as insurers. I think that's a good point. Yet, largest market in the world, and the investment is happening now. But you're right; it should have been happening maybe years ago. And we still have maybe too much European-centric industry, and we need to go. And then I look at the other side of the world in terms of Asia. Okay, we go there, but again, we need to scale up because these are the big trading nations in the world. So we need to be there where the trade is.
Absolutely. And maybe, Antonio, I think just as from a broking perspective, we talk about the use of information and insights. I think that has to go hand in hand, obviously, with risk transfers, right? So if we can find that kind of perfect balance between credit management support, intelligence, risk transfer, and financing, I think we have one hell of a product that if we sell it in the right way, and again, remove complexity, less technical, and much more solution focused rather than product focused.
Gentlemen, if we switch our attention for just one moment from top line growth to bottom line, how the industry has been doing over the past cycle. And this is nothing short of spectacular, right? The industry has made good underwriting margins. But on the other side, it begs the question, why hasn't anyone tried to disrupt us yet? Why are the big people with the big databases not more interested in trade credit insurance? I don't know who would care to answer that.
I'm happy to go first if it helps.
Go for it, Stuart.
Thanks. Well, I think, Richard, you talked about margin in our industry, and I think there are other criteria which, when you're looking to enter a market, and I think margin is one of them, but I also think it's return on capital. I think one of the areas that certainly my reinsurance colleagues remind me on a regular basis is the kind of the capital requirements for kind of entering into that kind of into the trade credit market is greater than some other kind of P&C lines. So I think there are other barriers to entry that may make that more difficult to disrupt. And I think what we are seeing is when we see the companies, multi-line insurers looking at it, they're coming more providing capital that potentially sits behind MGAs, which are much more focused, I think, not on disrupting the current market, which is dominated by the big three, but really playing in certain areas, whether it's certain regions or certain products. So I think there's an element there. I also think, and I know Anna and I had this discussion once many years ago around the kind of role the likes of platforms like Amazon and Alibaba would play going forward. And I think we both felt at the time when we had this discussion, which I admit was a few years ago, was that we expected to see that B2C purchasing trends and behaviors kind of move into that B2B space, and potentially we would see the likes of Amazon, especially maybe less so Alibaba now, but Amazon being a true competitor where they integrate some of those non-payment products and financing products. But again, that's not really materialized. We've also seen insurtechs kind of come in with some fantastic technology, but really have lacked the scale to kind of compete with the big carriers, where there is a huge investment still in terms of the kind of analysts and global footprint. I think for me, the biggest challenge here and the big question mark is AI, because maybe because I've just finished the latest podcast of Mo Gadat, which is the former business officer for Google X. And every time I listen to one of his podcasts, it scares the life out of me about how AI is transforming and potentially displacing and disrupting certain sectors. And I think if the AI moves as quickly as potentially it could, I think it then gives that opportunity for other players with capital to come in and create underwriting platforms and models that do allow them to compete with the big three carriers. But maybe I'll pass over to Antonio and Anil to.
Yeah, I think you asked the question, why are we not disrupted? I don't think we ask that question in our business. It's more, how can we disrupt ourselves? How can we create new business models? I think the problem was in the past when you're looking innovation, people sort of carved out existing resources and said, let's develop something new. And it ended up being a tweak of an existing product or really just a product revamp. And when I look at the investment, I always say, if you put nothing in, you get nothing out. You need to be a bit bold, and that's what we're doing. Even to be fair, Allianz Trade, we're doing that now. We've carved out people. We're taking bold decisions, and we're not looking and waiting for other people to innovate. We're saying, how can we innovate ourselves? So how can we design? How can we build? How can we launch new solutions? I think if you just sit around and wait, it will happen. I think our competitor won't be someone that we know today. In 10 years, it'll be someone, maybe it'll be a data company who offers insurance, or an IT company who offers it, rather than an insurance company who gives data. So I think for us, I'm not waiting for anyone to disrupt us. We're looking at how we can disrupt our own business and develop us into a new area. I think it will likely come from someone maybe in the payments markets. This is where I see payment and trade much more linked in today. So the question for us as an industry is, let's not wait for it to happen. And as Stuart rightly says, there's a lot of capital to put into this business as well. And I think that's off-putting to the other market. But I also think it's not as easy as people say. As you said, it takes a lot of experience to get there. Do I think we'll get a total platform coming in? I still think our business is highly personal. I still think that human interaction is what's needed. And you even see it in P&C insurance. Okay, we have these platforms, but have they sold it online? I saw one of the questions on the web, can you really sell it through a platform, through a software company, through an ecosystem? I haven't seen it. I haven't seen it in P&C insurance, and I've yet to see trade credit insurance. That final link, you need that expertise of a broker, that expertise of someone to really add that value and convince the client. Sure, once it's up and running, software platforms work really well, but I've yet to see a software platform bring me my largest customer, or even win a large customer. So I still think that's some time off.
May have a slightly different view. I've lived in one of the biggest insurance companies for 10 years, and I've seen the search for innovation and disruption with huge investments in different projects and ideas. And finally, most of them produce innovation, but without disruption, the expected disruption that we were looking for. And so at the end, I have the impression that probably, and that's a personal view, probably our business has too much of human to be disruptive through tech or a few millions put on the tables, or hundreds of millions, or whatever. If you look back 1 second, how many industries that can offer in 2 decades a product that is much better than 20 years ago for 1/3 of the price? Only industries that innovate. Maybe we're not talking about disruptive innovation, but definitely we are innovating. We are dramatically improving risk assessment capabilities. We leverage data. We are more precise in analyzing situations. And this is embedded in the solutions we propose to the market. So, sorry, man, I'm bothered to be pointed out as the person that works in an industry that is static. We are not static at all. It is improving, it is innovating with probably an approach that is more incremental. And again, I want to say a word on artificial intelligence. You may have the best engine to detect the best decision in the world, but if you are not able to explain why this is the decision, your client will never buy it. So let's go back to the human dimension mentioned by Anil.
Interesting, gentlemen, and it takes me back to a pretty drunk Australian broker that I met some time ago, who said,
it's an Australian broker event, we know it.
Wasn't an Aon broker.
He basically said, you miserable bunch, you never innovate. And I think that all 3 of you just said that we do innovate, just that it's not visible. Now, the question is then, from here, who do you expect to be the innovator? Will that be present market parties? Will that be the MGAs that were talked about by Stuart? Who will be the innovator?
Personally, I think it will be the market leader. I have to say, I think it will be coming from us. I think you've got to, smart players make bold moves. You've got to make a bold move. So, and it needs a significant investment. So I don't think we should wait. I think it could come from us. And by the way, it doesn't mean it can be just us. It could be someone else as well. So I'm not just sitting there saying it could be a broker, it could be someone else out there as well. But for us, I don't think we should sit and think who else is going to do it. It's more how we can do it. And as I said, I expect to see that.
Yeah. Maybe, Richard, if I may just say a few words. I often think, I'm not sure who the drunk broker was, but I could probably...
He was not from Aon.
No. Be nice, Stuart, be nice.
No, probably purple broker. But just the comment on what I often hear is about the industry's become antiquated and out of date. The product, I often think if you actually kind of scratch below the surface on that question, 9 times out of 10, it's because they're not getting the underlying risk covered at the right price. So we're often accused of not innovating, but ultimately what they're saying is we're not producing, being able to cover the risk or provide the structure. So I think it's making sure we understand what we mean by innovation. I think Antonio picked up on innovation is the aggregation of marginal gains. So we continually innovate. So sometimes that's not always as visible. You don't get that kind of big bang at the end of that innovation. I think certainly within Aon, I mean, we have now appointed a global head of innovation for one reason, is that it's what we found is that we do something good and it would be an innovation based on just maybe refining or improving something that was already in place. But we found it very difficult to elevate that to a point where we could then profile it and scale it. So the head of innovation's job is not as much about not just creating new things and solutions, but also making sure we have a platform to really scale and showcase some of the fantastic stuff that we do within our industry. And this isn't just an Aon-wide claim. It's because that has to go hand in hand with some of the insurers. We cover whether it's covering subscription risk or chargebacks for payment processes that Anil mentions, some of the trading risks that we've seen, mark to market, financial hedges. So I think we do lots of great things. We don't always find a way of profiling it in the right way to attract new industries into our business. So I think there's obviously another way where longer term, of course, we need to have one eye on some of the technologies that are changing the way trade is conducted, whether it be Web3, blockchain, which I guess is kind of been used, a word that's been thrown around for many years. But I do think Anil's point as well, innovation will come from the big 3 carriers, as well as some of the MGAs that we see, which often are providing complementary products and solutions that sit off the back of the innovation of the big 3 carriers.
If I may add, I totally agree. I think innovation will collectively arrive from the big players of the industry. I mean, we as insurers, we are obliged. Because our clients, they evolve and innovate every day. So we need to keep the pace. If you go back 10 years ago, I used to have three clients asking for an API or a web service. At that moment, it was web services. While today is becoming a standard. And when I look at the intermediaries, and even the intermediary sector is evolving so much. Intermediaries are innovating, and we will see, I think, a big difference in the performance of those that invest and see, pursue a vision in innovation, and those that don't have the means at the end. So it's a collective effort, but you need to have a certain scale.
Makes sense, and is very closely aligned to a question that Alexander asked. Alexander is writing, "Hello, gentlemen. Thank you for these high-quality interventions. Some startups primarily focused on software for CFOs are starting to offer embedded trade credit insurance in their software. What are your thoughts on this new form of distribution?" And Stuart, if I can ask you first, because that would seem like a direct competitor to you, right?
Thank you, Richard. Good question. I think the answer is I think that is something we'll see an emergence of. I think it's also maybe more focused around the SME segment at this stage. So I think we're likely to see kind of that take up, which I think brokers have a differing kind of level of, I guess, role to play in the SME sector. So I think that is some of the new technologies that we're looking at. I still think behind that there may be requirement for advisory services, but I think that's a trend that we're watching closely, because I think that potentially it's a little bit like the Amazon discussion, right? It's using a platform or software to kind of then upsell or position different types of products. So I do see that as being a kind of a trend that we're likely to see more of. But I think that's probably more at the SME end.
Yeah, I mean, we're sitting behind some of those platforms. I think it's more SME risks they're writing. You know, when you get a large risk, they need that human interaction or specialist interaction. So I think it's another one, as well as we've seen on ecosystems. We've seen, you know, so I think this is part of the distribution challenge. How do we get more out there to grow the market? But it's still not been a big source of income coming through. And as you said, that the model is still limited in terms of how much credit cover can they put down and how much capital can they put behind it.
Yeah, I agree. At the end, this new form of distribution, which is the easiest way to inject an insurance policy, an insurance concept within your accounting process, because we are talking about this, it's a way to reach that segment, which is, as of today, a kind of taboo for our industry, because brokers, they have too high cost of acquisition to arrive to that segment. And we don't have the people. We don't have the people on the field. I mean, we got only few little successes here and there with partnerships, okay? But at the end, this is a new segment for everyone. And this is a smart way to tackle with this segment, because let's remind that most of those companies, not only, I mean, they don't know very well what we do, but they don't have time to listen to us. They are underwater. I mean, they're small companies, fully cannibalized by their operations or their commercial stuff, and they have little time to sit down and listen to someone that explains how to manage an insurance policy. So I think this is a smart way to tackle with a new segment that, as of today, as Anil was saying, is producing, say, marginal contribution to growth. But personally, I think it is a promising segment.
And it's a segment which is talked about a lot. So if you manage to see this morning's keynote speech by the gentleman of DG Trade of the European Commission, SMEs are very much on his mind. And as an industry, he not only asks of us, but he demands that we do something about it. Let's go to the product, because that's a good segue probably. Theo is saying, Anil's comments on simplifying products is really interesting. Is it conceivable that the big three insurers could collaborate on one common policy language, basic terms, risk rating, etc.?
I mean, I think we have a syndicate solution within our market. I don't think it's just about the big three, but we syndicate quite a lot all day. I don't think that's the magic solution. I mean, you know, we have broker wordings, we have market wordings. I know brokers compare our ratings all the time. I'm not sure that's the magic wording. And actually, sometimes it brings more costs into the solution.
Yeah, I think.
Sorry. Yeah.
I think you're right. I mean, I think for me, the use of common word, having uniform wordings has value when you're looking at kind of multi-insurer solutions that require levels of syndication. And I think, you know, most of our business still in the trade credit area, you know, you'd say is 90% is kind of primary carrier with potentially some excess lines capacity that sits above. So I'm not quite sure the wording itself solves the problem. I think there's been some discussion around having a bank wording that achieves, from a Basel 3 or Basel 4 perspective. But again, I think what we're finding is that every bank or financial institution will have a different view internally on how they want that policy to be structured. So I think the uniformity probably has less value than initially thought, would be my view.
Yeah, I think it's more about how do you bring capacity to those large clients who want large credit limits by coming together as an industry. And I think in the last 10 to 15 years, we've done that as an industry, and it's been led by a number of the brokers who've said, look, how do we sit down? On a day-to-day level, I think it's not something that's going to radically grow our business model to that level. And as I said, it exists today.
In my understanding, maybe I'm wrong, we started from SME, no? So syndication and other solutions are probably not the key one for tackling with those needs. I think that the standardization mode are me sitting with Anil, deciding on a common language to talk to the market. I think will come more from, let's say, standardization of some accounting processes. We mentioned those softwares. If they are built with an open architecture able to integrate our services through API, for instance, this will definitely open the market to everyone. They will be a sort of facilitator for distribution. We would be a kind of a product factory with standards that can actually easily allow different players to be plugged in, depending on the choice of the client. And that would open a new market one day.
So let's go from simplification to widening of cover. Before COVID, I think there was a movement, or at least a start of a movement, to integrate the trade credit product with political risk, with surety, and then COVID came, and we all had different things to worry about. Is this a trend that you see returning now that things are slowly coming back to normal? Stuart, would you say something about this?
Sure. Yeah. I mean, I think from my perspective, I look at, you kind of take my own personal experience of Aon Credit Solutions. I think putting the credit specialties together, but really truly integrating those different kind of areas of expertise, for me, it creates a very different culture of innovation and change. So change becomes an opportunity rather than a threat. And I think sometimes the businesses realize, and that's not just saying they sit next to each other, they've got to work within the same team. And I think what you then see is a level of innovation, but also a focus on what I call best of both worlds. And we've kind of touched on it a little bit around some of the areas. And if I just kind of very simply, something like trade credit, you think about the global servicing and risk expertise that exists around the world. When you think about structured credit, political risk, you think about the flexibility on wordings, the multi-insurer syndicated solutions, and then you look at surety and you think, well, actually, surety is being used to cover different credit risks that sit across the balance sheet, for example, in respect of collateral and security replacements. So I think if you combine that, you're then able to kind of, it just creates, I think, a platform where you can think about the client's needs a little bit more and say, actually, we want to solve this problem. How do we kind of use those disciplines together? But realizing you need what I call domain or subject matter experts that sit behind still to be able to execute on some of those very technical solutions.
Yeah, I think I'm with you, Stuart. I mean, we have a surety business, political risk business, and credit business. And certainly when we're speaking to one customer, we may be speaking about all different solutions. But definitely they want to meet a subject expert who's coming along and really speaking at their level. And so I think you have teal teams, but really it's not one product, one offering that's really going to be a turnkey solution for the customer. So that's what we're seeing in the market.
Yeah. If you look at it from a strategic point of view, in my opinion, there's a value in having those business lines together. because somehow you diversify your portfolio. Financially, you have even capital, advantages. So that's definitely something that creates some value. But and I'm more aware since I'm in charge of single risk and surety. The more you enter into this business line, the less you understand the synergies. I mean, more than synergies, there are, let's say, means in common. On the product level, you reuse some assessment of the debtor. On operations, maybe some tools, part of tools or part of processes. When it comes to distribution, yes, definitely. But very often you don't talk to the same people. You go to the client, and the surety team is different from the trade credit team. So what I mean is that yes, these business lines are similar and financially makes sense to have them together. They stabilize the portfolios. But from an operational point of view on the field, they have much more limited synergies.
Thank you. Can I go back to the title of this webinar, Trade Credit Distribution, for instance? There is a question from Dinesh. Do you think there's an opportunity to distribute trade credit insurance through invoice discounting platforms? And can I add on to that question? If yes, which probably is the case, is there a changing role of the insurance intermediary then? Who would care to take that question?
Maybe I can start because I will be short. I don't like the product, so making it very easy. I mean, there are insurers, even big. Not present, but that have half of the portfolio on unique guarantees, things like that. I mean, very nice. This is not my business. I'm in another industry.
Stuart, you want to go then?
Sure. Well, intermediaries. I think I think invoice discounting. I think there is an opportunity. I think financing, liquidity go hand in hand with kind of credit protection. So I think by that definition means that I think you're going to see more opportunities where you're looking to provide both parts of the jigsaw. So whether that's the broker providing the insurance and the funding, or the funder providing the insurance, I think there's definitely opportunities there. I think the question of, is there a shift of broker? I think the broking role is changing. I think, and I look at it as like, you've got to move away from just being a respected broker, a transactor. You've got to be a trusted advisor to your client, where you're able to add value across the whole spectrum of the end-to-end process, whether it's credit management, information, risk solution, funding. So I think, is there a shift? I think there has been a shift, and that's probably going to be accelerated and accentuated by digitalization, but it's been going on, I believe, since 2010 at quite a pace. I always think the broker's role is a bit like, we just come off the Ryder Cup. I'm sure there's a few golf fans on the call, hopefully a few from the US that managed to watch it as well. But I also think the role of the broker is like a caddy to a golfer. You've got to be able to have all the clubs in the bag to give to the golfer, your client, but you've also got to be able to understand their strengths and weaknesses, and also the course that they're playing. So to kind of link back to the Ryder Cup win for Europe yesterday, I think the role of the broker as an advisor will become really important as clients have to kind of navigate an increasingly kind of volatile course.
Yeah, I definitely see there's an opportunity with platforms. You're right. What the insurer wants is a good spread of risk or good pricing on if there's a lack of spread. And this is where the brokers are actively engaged with advising the platforms and as a customer what they need to do to keep the appetite of the insurers fair, or the spread fair, or the selectivity of fair. And then, of course, you've got to advise them on how to exclude fraud risk, which is the bigger challenge for them, because that's the risk that we're seeing, buyer and seller fraud. And I think the banks have spent an enormous amount of investment in terms of KYC, know your customer, and have really eliminated that. Well, not eliminated, but reduced that from their business model. And this is the challenge of these platforms. But interestingly, some of the platforms are also working with traditional banks today. So I definitely see a lot of movement and a lot of opportunity in that space. This is a great question.
Well, Well, gentlemen, we've got about 10 minutes left, and I've kept the biggest two questions for last. I'll keep you guessing about the very last one. But from the audience, there are a lot of questions. How do you see the present environment? How do you see the future? We've got inflation. We've got increasing interest rates, which may decrease the final value of the indemnification, but may also increase the number of losses. How do you see the market at this point?
So look, it's been a very strange time because there is a real, when you go and see clients out there, there is a real realism of risk. I think we've done a good job at educating the customers during a low risk environment to say, look, the risk is still there. And certainly in terms of claims, we've seen frequency come back. I think as an industry, we haven't suffered significant severity claims, or at least when I look at the figures of all the insurers out there, there's no significant severity claims. So I definitely think it's on the agenda, and we've done a great job at keeping it on the agenda. And I think you see that. So in terms of the economy, do we think it's going to go back to, horrific risk? I think it's going to be pockets of risks in certain markets and in certain trade sectors. And we're seeing that across the globe. But I think it's going to be more about normalizing claims, normalizing losses, rather than what we see a complete downturn. A lot of markets, will they go into recession or will they not go into recession? As I said, it's been baked into our risk models. It's been baked into our PD effects. So if it does happen, we're certainly ready for it. But as I said, I don't see any big panic out there, a big wave of losses coming through across our industry. So we're in a very good fortunate place, which is what our clients want. They want us to help us grow. So we're in a very good place now at the moment, I think.
Yeah, I think I totally agree with Anil. I think, with the perception of risk is high, but the reality of claims is still relatively low, albeit normalizing. So I guess the question I always get asked is, if you've got such a low loss performance across the industry, does the product lose its value? And I think for certain industry groups or certain companies that buy it as purely a risk transfer tool, that may be the case. I don't think we've seen a kind of a massive exodus of clients from our industry yet, because I think they still certainly see the perception. But I think there's an element of that's how we have to sell the product slightly differently. Not that we can ignore or should get complacent about providing risk transfer, but there are a number of other benefits that it brings, especially when you have one of the most volatile business landscapes. If you're going to have to sustain a trading strategy and grow your business, you're going to want to eliminate some of those uncertainties. And I think credit insurance, if positioned in the right way, still does that.
The importance of having claims, of course, is key, because it impacts the awareness and the appetite for that product. And after COVID, we learned our models were not completely right, and because we were not considering some variables. And we discovered that state intervention can be a variable that changes completely the risk on the market. So now we are learning from that. And as of today, we are trying to run again the exercise every week, every month, and probably the central scenario, as Anil was saying, is stabilizing, returning to a normal amount of claims. But what I think we should be prepared at is that even if, globally, this claims curve will realize on the market, we will have here and there, geographically or sectorally, more volatility and big surprises. And it can be fast. It can be really fast. And that's, a key characteristic of this new world, where everything happens suddenly and fast.
Thank you. And now the real big question. We've said a number of times this is still a people's business, which I agree with wholeheartedly. But then the second question is, do we have the correct people? Do we have the correct composition of people in our industry? we have enough people with fresh ideas from the outside. And I've heard you, Anil, give the start of an answer to that. Would you care to finish that, please?
Okay. Well, look, I think, firstly, I think insurers need to reposition themselves in the marketplace today. You know, we saw that we need to be attractive. A lot of the questions actually on the US, you know, and I believe that we need to be attractive to recruit people in markets like the US, and, you know, a big driver on that. You know, I think one of the moves Allianz have done is we changed our name from Euler Hermes to Allianz, and that really helped us. But also repositioning, we need people with new skills. We need tech skills. We need data scientists. People now looking at a work-life different balance. I think the way you behave as a CEO has to happen. We need to reskill. And then I think there's the sort of the elephant in the room around diversity. I think as insurers, we have made a big push on gender diversity. It's still not enough, but it's good to see senior leadership positions being filled by women. I know Allianz Trade has a female CEO. In fact, we used to have her successor was female as well. I think we need to carry on with that. Where I think as an industry we haven't done so well is probably more ethnic diversity. We're still an industry with Anglo-Saxon people in the leadership position. And yet, if we want to move into markets like the US or Asia or even the Middle East, where I am today, we need to have leaders coming from outside that area. You know, we need leaders from different diversities, from India, from Asia, from US, etc., coming into our industry. So I think this is the big challenge for us. I mean, we talked about geography in there, but, you know, you talked about it being a people industry, but then you need people from a diverse background to sell to all clients around the world. That comes with mobility as well. So again, you've got to recruit people and move them around, because sometimes what we try to do is they start maybe in Asia, they move to Europe, understand a bit more about our business, and then move back again. But you've really got to go out there and hunt new talent, and really, as much effort we put into sales, we have to put into recruitment, really finding these people, attracting them. And then, to be fair, you have a great career as I have in the industry, and as I'm sure many of you on the call have as well.
Antonio, what do you think?
Yeah, I agree. The diversity is clearly something we have still to work on. I can tell you what happened 10 years ago when I joined this industry. I was coming from the big generalist P&C world and life world, from a big insurer, and you enter into a niche market where everyone is expert of something, and they use words that you never heard in your life, and you spend 20 years in insurance to discover that you don't know anything, and this is the impact of entering an expert market, okay, a niche expert market. And I think that we attract a lot of experts, sometimes auto-referential, and what we are missing is also, new blood in terms of manageriality, in strategy, on vision, new leaders. And we struggle to attract those skills, those competences, also because we are not very visible. And so I come back to my very initial comment. Collectively, we still have a lot to do on this. So that would change, I think, if we really invest in diversity, as Ellen was saying, but also attracting new skills, going out of this little universe of trade credit insurance expert, we will all gain a lot for the perennity of this industry.
Richard, did you want me to comment? I'm conscious of time. Yeah, I'll keep it brief because I agree 100% with both Antonio and Anil's comments, but just a couple of maybe kind of anecdotal comments. One, I think we've probably all been in that situation where we're interviewing a kind of Gen Y or Gen Z, and we probably get asked as many questions of us as we ask of them. And I think that's something that if we are going to attract the best talent and diverse talent, we need to make sure we've got a compelling story. Anil summed it up with, we need to treat recruitment as the same way we should be treating sales, albeit there's improvements in both areas. My son and my niece both came and worked as an intern within Aon's structured credit business last summer, and they would never have thought that would be a cool thing to do, is go and work in insurance. But they both came away going, wow, look, we kind of feel like we're kind of working on things that kind of have a real contribution towards trading around the world, to developing investments within developing countries in terms of project finance. And the more we kind of profile our business that way, it's quite a cool business where people can make an impact on society. And I think we need to sell that more. And also the last comment, maybe slightly more controversial. I think we do have a habit of just employing the same people with different colors in different areas. And then we're expecting different results. And I think I certainly know from my perspective, I like to surround myself with people who have a 5, 10, 15-year vision of where our business will go, because I know my default will probably be 5 years. Not to say I've only got 5 years left, but it's important that you have people who have that diversity of thought to think about what the long-term solutions look like. And I don't
Richard, you need to get a female on the panel next year. And if you don't have any, we've got plenty of talent at Allianz Trade.
Thank you. I'll take you up on that one. This is a call to action if there ever was one. A former employer of mine once did and this was general insurance, not just trade credit insurance, did a kind of survey where insurance is in young people at universities on their wish list to be employed. And we just came after going to war. Now, think about that. If that is the image our industry has, we're really doing something wrong, and we need to work at it.
For sure.
And with that, ladies and gentlemen of the audience, I think we've slowly come to the end of this webinar. Thank you to our speakers. I think you were extremely, extremely interesting and sometimes controversial, and that's exactly what we want. Thank you to the audience for your attention and your thought-provoking question, and I'm conscious we did not answer them all. I think this webinar could have gone on for at least another hour, but we all have work to do, right?
Right.
Any other questions are welcome with us. And a reminder that this webinar can be seen as of the beginning of next week under the resources section of our website. Now, the next item tomorrow at 9 a.m. UK time, 10 a.m. CET, 3 p.m. Hong Kong, Singapore, 4 p.m. Tokyo, and a ghastly 4 a.m. on the East Coast of the US is on regulatory change, a subject that will touch all of us. And we hope to see you tomorrow, the rest of the week. There are plenty of other items for you to look at. But for now, this is Isisa signing off from Schiphol Airport in the Netherlands. Have a good day. Have a good week. Thank you very much.
Thanks, Richard.
Thank you. Thank you very much.
Thank you, Richard.